Hello and welcome to our webinar today, Cyber Liability and Risk Management. Thank you all for joining us. I'm your host today. I am Mark Carl, Chief Security Officer at PDI and the Vice Chair of the Conexxus Data Security Committee. Next slide. Here's our agenda for today. The first thing I want to do is go through a little housekeeping. Next slide. So the replay of this webinar will be made available on Conexxus365.org. You can send your questions directly through the GoToWebinar interface. Please feel free to send those in early if you'd like, and we'll address those questions at the end of the session. There are PCI continuing education credits sometimes available for qualifying live events. You can please reach out to Conexxus staff here if you're interested in that. A little disclaimer, of course, from our legal counsel. So the views and opinions in this webinar are solely those of the speakers and not those of Conexxus or the other organizations. Next slide, please. So a huge thank you to and shout out to our 21 annual Diamond sponsors for Conexxus. The extra support is really appreciated and allows us to continue the work that we do on behalf of the entire industry. Next slide, a little bit about Conexxus. Conexxus is a nonprofit technology organization. Our members really do the heavy lifting. We provide a neutral forum where retailers and vendors can network and come together to create standards and solutions that are beneficial to our industry as a whole. We also educate through white papers and events like this one at Conexxus365. And we advocate on a technical level at other organizations to help steer the conversation around standards and policies so that changes don't negatively affect your business. Next slide, a little bit about Conexxus365. It is a weekly education subscription series. We hope that you'll tune in next week for our webinar that's sponsored by Intel, talking about the frictionless revolution or evolution of IoT. Some of the recent events also include IoT, EMV migration, and chargebacks, and many other interesting topics. I'd recommend you go back and check those out, some of the previous webinars. All very good content. Next slide. Contact us at Conexxus. You can reach out to any Conexxus staff member. You can go to the website. You can also find us on LinkedIn if you search for Conexxus.org. The next slide, I will introduce our presenters that we have today. So first we have Chris Buccolo of Sysnet. I've known Chris for quite a while, number of years. Most recently, Chris worked for me at ControlScan before we sold that business to Sysnet. And so Chris ran strategy for us, obviously understands business strategy very well. And in the process at ControlScan, Chris became an insurance agent, our named agent in all 50 states to support the programs for cyber insurance that we offered to our customers. And Matt, another good friend of mine, was with Lockton at the time, and Lockton was the carrier for the insurance that we were producing. And so between these two, they've probably forgotten more about insurance and cyber risk than I will ever know. But both were very helpful to me in the past in the business that we operated. And so with that, Chris, I will hand over to you. I think you're going to talk a little bit more about Sysnet and Toma Insurance Partners, where Matt works today.
Yes, thank you, Mark. I really appreciate it. Appreciate the opportunity to be here with you today as well. Chris Buccolo, as Mark mentioned, I came from the ControlScan side of Sysnet, which is basically focused on PCI compliance, managed security services, and also consulting services that you would typically see as QSA level 1 audits and things like that. Matt Assini, my partner in crime here from the Lockton world. Lockton is actually the world's largest privately held insurance brokerage. They have a large operation in the US, but also a nice global footprint. And Matt is associated with them through his agency, Toma Insurance Partners. So we work together with Lockton within the United States and outside of it as well. What I'd like to do here is just give you just a snapshot of what Matt and I are going to go over today. And I think of it from the standpoint of, we're going to talk about breaches because really that's what the insurance and the cyber coverage is all about. You're identifying risk, you're mitigating risk to the degree you can, And then in this scenario, we're going to really talk about transfer of risk. Risk transfer is what everybody would want to do in a perfect world. And we're going to talk about, in this crazy market impacted by things like ransomware, we're going to talk about what does that mean in terms of what you can get, what are the costs, and what are some of the implications. We're going to talk a little bit about the dealer model. Some people call it the franchise model, depending on what vertical you're in, but talk about some of the structure and some of the tricky things when you have all the different parties involved in insurance. And then try to arm you with some top takeaways that hopefully will be helpful to you as you go back and deal with these issues going forward. So on a breach perspective, again, there might not be anything new and earth-shattering here. I'll just say that I look at a lot of different breach studies, usually about once a year or so. You can't go to one place and get all the breach information, of course, but certainly brute force attacks where people are using algorithms are big on getting credentials, but things that have grown in recent months have been phishing and social engineering attacks of all kinds. And I doubt that's really news to you. The other thing I'd like people to focus on is whether it's a credit card breach, whether it's a ransomware attack or something along those lines, it can often involve a third-party service provider. So whether it's card present in a store, whether it's a web presence, or again, whether it's something to do with ransomware, those attacks are often carried out through third-party service providers. So, what does it really mean for the organization? You've got your credit card breach information here on the left and ransomware on the right. From a credit card standpoint, it's still true that they're very stealthy in a lot of cases, and it often takes 4 or 5, 6 months to determine that a breach has taken place. And by that time, the card brands have already triangulated everything back to that merchant location. You probably already know whether it's called a dealer or you refer to it as a credit card accepting merchant. They hold the bag. You hold the bag on the breach in terms of the responsibility for it with the card brands. And from a ransomware perspective, it happens pretty much right away. Once they've successfully gotten and encrypted those accounts and all of that information, you're finding out pretty much real time that you have a problem. So 2 very different situations that can impact you in a big way. Just thought I'd throw in a few more. I mean, COVID has created all kinds of, with everybody working remotely and everybody being online, there's more attacks around social media, web presence, fake accounts, fake approaches. And I don't know about you, but from my standpoint, it is definitely getting harder to tell what's real and what isn't in terms of things that are coming at you. You really have to take a step back, but also people can fake a business or any kind of entity that might accept credit cards as part of their standard practice. And stealing information is a full-time job in these scenarios. Another, I would call it an oldie but a goodie that has gotten a lot of play is keylogging malware. And keylogging malware is really like a type of spyware. It's parasitic, so to speak, but it doesn't harm the host. It tries to lay low once it's in place with the idea of infiltrating and then stealing card data or other sensitive data. And my view of this is, why do they keep doing it? Because it works. Anything that works, they keep doing, just like phishing and social engineering. So again, there's a lot of things that lead to these breach scenarios that we're trying to protect against. So it really culminates in, what is the cost of a breach? You've got your monetary costs outlined here on the left. You've got your reputational damage, which we've been talking about for years, but that kind of tends to be a little more nebulous. And then you've got your time. And I will, quickly draw your attention, to the left chart that this is in the US, the average breach cost for credit cards is about 35 to 50K out of pocket. That's your hard costs on average. That's what the claims are usually in the neighborhood of. Ransom fees have doubled in the small business world from 40 something to 83 in a relatively short period of time. The other thing I'd like to point out as far as the time element on the right is that I can't stress, I don't know about you, but to me, time is what bothers me the most. Spent time, systems that have to be redone, rejuvenated, rebuilt, and just getting back to business as normal. Anything that requires a loss of time is awfully painful these days. And of course, it does also equate to money. We all understand that really well. So just for a minute on the ransomware situation, the law enforcement has really grappled with this. Their opinion on whether you should pay or not pay, it's shifted over time. And in the early days, the idea was not to pay, and then the law enforcement started saying just pay it, it's easier, and get your files back and move on. But now there's been more of a shift back towards not necessarily paying automatically. And we're now seeing a few states in the United States that are considering legislation that would ban the ability to pay the ransom. Now, I'm not aware of any of that getting in place yet, so I don't want to scare anybody. But there's a lot of activity around that legislatively, so you may want to check on that a little bit, so you can see your sort of lose-lose choices. And just like with breaches we've seen in the credit card world, having a backdoor to the system is very routine for malware that is done on the credit card side as well. When it goes in through a remote access platform, they often leave a backdoor open with the hope of a second breach. And in the retail world, that's happened quite a bit as well. So I'm going to turn it over to Matt to start talking a bit more about the actual data breach and cyber liability programs that are out there. Matt?
Thank you, Chris, and appreciate the opportunity to share some information related to insurance specifically. This slide titled Data Breach Protection really refers to the cardholder data breach that Chris referred to a few slides back. We think a better naming convention for data breach protection would be an expense waiver program, for which we have several in place today. But that coverage is only for, as stated, PCI, payment card industry related breaches. So the coverage is quite narrow. Items like ransomware would not be picked up under this type of a program. And what we do is we typically insure the parent entity. Maybe it's the petroleum brand that sits in the line of liability for card breaches and has the agreement with the card brands, Visa, MasterCard. Because this is very narrow coverage, it's therefore very cost effective and fairly well embraced today. But it is limiting. And it's often bundled with PCI compliance, where Locked in Toma partner with Sysnet regularly is in the process of bundling this expense waiver together with the PCI compliance and security of Sysnet. And like I said, that because the coverage is narrow and card brands, as stated, are more surgical, more technical in how they're addressing these ADC, account data compromise incidences, we're seeing that claims are actually going down a bit in this particular area, which takes us to the next slide.
Yeah, and just real quick, Matt, the only thing I wanted to add there was we have recently seen a trend that reinforces this, that in Europe, Visa has come out with a new program to, if the breach is not pretty widespread, it's not very severe, it doesn't involve more than 30,000 cards, that type of thing, you can definitely see that they're less likely to require a forensic investigation and less likely to issue fines and penalties. So I think it just speaks to kind of that narrow nature. But boy, over the last so many years, I keep saying for pennies on the dollar, there's never been anything this effective, cost effective, considering usually you're getting an aggregate coverage of 100,000 per merchant per location and 500,000 for the overall business. So for the money, that's pretty good.
There's no doubt. And just to complement the comment, I fully agree. And you and I talk about this all the time. We view this as the foundation of coverage. And because it's putting the insured in control of a PCI related incident, it makes sense to keep it because it's so cost effective and it provides the framework and really guidance for a merchant to then go out and complement this with their own cyber insurance.
Right. And if you're a dealer and you have a direct program with a card brand or with a processor and or PCI company, go back and find out if in that PCI bundle or security bundle, if data breach protection or expense waiver program is part and parcel to that. It's a good thing to double check.
And then shifting to cyber liability insurance, and many of you may have a cyber liability insurance for your company. Again, as I just stated, and through that complement, we view this for clients that do have some sort of expense waiver, breach protection through their processor or through their partner, is that this really serves to cover all forms of breaches. So costs are far different than the expense waiver, naturally, because you're picking up any form of a data breach. And it can be designed for small businesses as well as the largest, of course, the targets of the world who have a lot of coverage. But what we're seeing with today's market, with the amount of ransomware and other cyber extortion related incidents, is that cyber insurance carriers are experiencing a lot of claims today. And naturally, the market is going to harden as a result. Many may have seen in your cyber insurance renewals or should anticipate in your forthcoming renewal a higher deductible or retention, certainly higher premiums. Sometimes carriers will go from offering, say, 10 million of coverage to 5 million at renewal for the same price. So then if you still want 10, it would require that you work with your broker to get 5 million on top of the 5 million that you now have. But again, I think that the bottom line is what's happened is companies would view cyber insurance as you could get it for a low deductible and it would be coverage at what we call first dollar. Now we're seeing with higher deductibles, it's more of a balance sheet protector. So the two work together, and it takes us to the next slide of where we go from here.
And Matt, just real quick before we do that, just a couple things.
Yeah.
One is that I think what struck me when I was looking at your bullet point about security posture requirements is I've been amazed as a security and compliance person how much these insurance carriers have learned the hard way, I guess, in the last 6 to 8 months due to ransomware and related attacks, that they now understand the security posture elements that are available to businesses in the marketplace that they can get either provide themselves or through managed security providers that can make that security posture such that they'll meet the underwriting requirements that these companies are now throwing at their customers to qualify, right?
Yeah, and I really appreciate you bringing that up, Chris. I missed that, and it's critical today that carriers, if some basic, well, I wouldn't even say it basic, more elaborate security posture measures are not in place, then carriers are refusing to even offer a proposal or an indication for coverage. There's just so much demand for cyber insurance today in the US, outside the US, that standards must be met before certain carriers will even consider insuring.
And the only other thing I wanted to ask about, I was trying to think of, things the audience might resonate here is this whole idea of how these might fit together, having that basic expense waiver program, and maybe it's even been expanded in some cases to include some other coverage like ransomware, but even so, it doesn't have the broad elements that these cyber coverage programs have. Can you give us a sense for any overlap and any contrast of the two together, if you have both?
Yeah, absolutely. So when we structure or make available cyber insurance to complement the expense waiver program, we make sure that because the cyber liability will also pick up PCI related incidences and corresponding fines, we make sure that the two are in harmony with one another, where one sits excess of the other. So there is an overlap on the PCI coverage that the expense waiver provides only. And then really what's critical is how we position it to the prospective clients, because again, in cyber, the expense waiver is not insurance to the merchant, to the small business. It's purely a waiver in their contractual arrangement. Whereas cyber liability insurance complements that, but it is insurance at the business merchant level. So it's really important that we position the insurance available, whether it's another 100,000 up to $1 million or more of coverage, depending on the size of the business, that we do that in the most streamlined fashion so that it isn't a heavy underwriting application process. We do it through a portal where we do need some basic information, some of which in our partnership, as you know, Sysnet already holds some of that basic information regarding the small or mid-sized company. I hope that answered your question, Chris. Anything else on that?
Well, the one other thing I was thinking about was notifications. Usually these cyber coverage policies give help with, okay, what are the notifications that have to occur? How can I get some assistance with that? I know, everything in the U.S. is state by state. That's not a surprise to anyone. And states have different ways of operating around breaches. But one thing we have noticed is they're getting more aggressive at wanting to be in the loop on breaches. So notification is important to state attorney general's offices. We have seen one state who's trying to enact a law that would create basically a wall of shame for cyber breaches, which makes me think that since so many breaches are already not reported, that might drive more people underground. But the basic idea is you really are supposed to notify both clients and certain agencies when breaches occur, and usually those policies help you with that.
Yeah, that's another good point. Most cyber policies, and virtually all that we would represent in the marketplace today, when there is a claim, there is a dedicated panel of advisors that work with the insured client who has a breach. And that generally starts with what is referred to as a breach coach. And that's a law firm that is specialized in working with the claimant and the corresponding affected consumers or potentially affected consumers and where they are around the country, and guide the insured on what requirements based on where those people are located they have to adhere to. So it's really critical that you buy a quality product, not just buy on price, because if you have a claim, you're going to want a dedicated breach coach law firm to guide you effectively so you can stay in business.
Excellent point. Can you talk a little bit about the structure considerations for our audience?
Yeah, and I think this is great. I think that we've hit on some of this. I think just coming down the line here, when we interact initially, it's important to understand the relationship between the credit card brands and the petroleum brands first and foremost. Is there a contractual arrangement such that the petroleum brand sits in the liability flow for a PCI credit card related incident. And that, when we know the answer to that, if it's yes, then we know we have the ability to establish an expense program where we have that narrow coverage, where we would insure the petroleum brand, who then would contractually waive liability to their dealers and marketers, depending on the situation. Mm-hmm. If the answer is no, then that may not be an option to consider. So then we may shift directly to more of a dealer-related cyber program, which we've set up several. But again, just on the petroleum brand, the parent, if you will, I don't know if that might be the right way to say that, but the corporate cyber insurance, what does that look like today for the petroleum brand? Because they, first and foremost, must have adequate protection depending on their risk tolerance. And then back to the point of what is their current control, what are their current controls, security controls in place, and go through a due diligence with the parent, the petroleum brand. And then moving down the line is, and Chris, I know we're going to talk a bit about a claim situation and that may be equivalent to this marketer scenario. And then I'll comment on how we've addressed that. But it's important, again, to know how the protection works. If we do have an expense waiver program in place, then remember, in that situation, we're insuring the parent, the petroleum brand only. And if there's an incident, there's going to be a limit that the insurance carrier is going to provide for any given single incident. So how does the protection match up to the overall merchant or merchant identification number and their respective locations? Is there an aggregate protection or aggregate insurance limit per incident? And if so, what is that? And if you have multiple locations impacted by a single incident, are they aware that there's an overarching aggregate per incident limit? And if they don't, they need to understand that clearly. So you have to read the fine print. And maybe, Chris, before we jump into that example, I'll just then say on the bottom side, of course, the dealer side is 100,000, if we are able to establish a expense waiver program that the dealers benefit from. And typically we see 100,000 per location or per business. And we also see often a $500,000 per incident limit. So if 5 or more locations are impacted by a single incident, the most the insurance carrier is going to pay is $500,000. So if you're a dealer with multiple locations, it's great to have this benefit through your contractual relationship. However, is that sufficient for your business? So we may look at complementing that for you. And then again, like you stated earlier, Chris, is that we may see a touch of coverage coming out in the breach protection world for ransomware, but highly limited, where a dealer might more adequately cover these types of risks, which are very common today, of social engineering and cyber extortion, with their own cyber policy that is not impacted by some other aggregate limit. They will have their own limit, regardless of the type of incident. And then I'd ask you, Chris, to talk on that claim, unless you had anything before that.
No, I'll just briefly add that, recently I ran into an unfortunate situation with one of our subsidiary companies where a brand, it's in the more in the franchise world, but it doesn't matter. It's the same concept. This brand signed an agreement with an insurance company for this, really was basic expense reimbursement for across their ecosystem of franchise locations. And they had the perception that each individual franchise owner or dealer owner, if you will, was covered with the aggregate of 100 and 500. But when the fine print was read and a breach occurred that spread out across a lot of locations within that brand's system, the policy actually said that the aggregate of 100 and 500 applied at the brand level. And you can imagine the response to that. So reading the fine print is critical. I had never run into that before, and I made the natural assumption that it was being done, those aggregates, at the individual business owner level as well. So reading that fine print was very eye-opening.
And I can speak to how we would structure that differently and how we are today. I won't use the client's name, of course, for confidentiality, but in the petroleum industry, where we first we broker the insurance, I should say, for the parent company. And that parent has about 1,000 dealers in their ecosystem. But the relationship started with a process to help them buy corporate cyber at the parent level. And that's about a $50 million coverage at the corporate level. And that means that business, that parent, has up to $50 million per incident. So that gives you a sense for corporate cyber. But what we've done then is, for the franchise or the dealer component, is we have arranged for a dedicated insurance carrier to provide cyber liability insurance for each of the dealers. And the parent has set a minimum requirement of $250,000 or more per dealer of coverage. If the dealer has multiple locations, that's tiered based on the size of the dealer. But just sticking with me here, that $250,000 is for each of the 1,000 franchisee dealer participants. And so one incident that may affect multiple dealers, each dealer will have up to $250,000 or more for the same incident. There is no overarching aggregate that would impact any of those dealers individually. Does that make sense?
Yeah. Thanks, Matt. That's very helpful. Thank you.
You bet. So I think we can go to the final.
Yeah. So basically what we wanted to do was just give you some things to think about here. I've been looking ahead, and Matt and I together have been looking out in the future. And from our perspective, one of the trends that we're really pretty sure about is that no matter what kind of program you get in the future, it's going to be based more on the security that you can basically prove is in place. That the premiums, the deductibles or retentions, as Matt refers to them sometimes, that those are going to be based on not just, what kind of business you are and how you do business, but really what kind of security posture you have, and are you living it? Are you doing regular scans? Are you doing regular log management? Do you have your antivirus up to date? Do you have your software patched and updated when it's supposed to? Do you have your firewall settings up to date? Those are things, just security type of things. Do you keep your security awareness training up to date? Have you delivered it this year? Do you have the right security policies in place? Have you delivered them to employees? All these things are going to be part of this insurance market. As it's gotten so crazy, they're getting smarter and they're getting more, they're asking better questions, and they're putting those requirements right into the underwriting for the true cyber policies. And I think really this next one is really just a repeat of what Matt already covered, but it's one we want to highlight. know what your breach protection program or expense waiver program protects you versus do you have corporate cyber liability? Do you need that? If you're a small business and you have general liability insurance that, you know how that is, they call it a mile wide and an inch deep sometimes. When it comes to things like cyber, there may be some kind of endorsement on there for cyber, but it's likely to be very small. So those are things to think about. Do you need a separate coverage item for that? And what's it going to cost in this crazy market, given the ransomware problem? So one of the things I'd like to stress that I like to talk about a lot is breakdown of roles and responsibilities. It doesn't matter whether it's a card present situation, whether it's e-commerce. One of the biggest causes of breaches these days, if you have any kind of web presence, it is in the e-commerce world, is web application attacks. And who is actually hosting that web application? Who's got the server? Is it being updated? Is it being tested? With the OWASP top 10 type of attack vectors. These are things that are important to know, given what we see with breaches. Where does your job accepting cards or having sensitive data begin and end versus those that are providing services for you? And what's basically in scope? If it's PCI, we know that a lot of breaches occur where people didn't properly identify what I was responsible for in relation to my service provider. And I know I mentioned this earlier, but state level scrutiny is definitely rising on the area of breaches in general, but also far as reselling or marketing something, it's important to be careful not to look like an insurance broker. And you should be able to get, unless you want to be, and you want to get licensed like I did and like our company did as an insurance agency to work with Lofton, the broker, unless you want to look like that, it's important to make sure your marketing materials, your website, that you don't look to a state regulatory authority like you're selling insurance. That's important. So we can talk more about that in the future, but just wanted to make sure you had that. Matt, before I turn it over to the Q&A part, I'm wondering if I missed anything or you have anything to add.
No, I think you hit it all there very well, Chris. That last comment about careful not to act or look like an insurance broker is very important. That in the way that we're structuring things together for clients in this industry and other industries is using the expense waiver as a tool where we are insuring the parent entity, not the end dealer, is very important, so that the petroleum brand does not appear as though because they are not selling insurance. So nothing in their materials should reflect that in how they message to their clients, dealers, marketers. But thank you.
Yeah, and you notice that using words or terms like expense waiver doesn't sound like insurance. Using words like protection and coverage sound more like insurance.
Absolutely. That's right.
And by the way, this image of Pennsylvania Insurance Department isn't to single them out as being especially onerous. It's just that it's my home state where I got licensed to begin with. So that's the one I picked out. So I just realized maybe I shouldn't have used them as an example, as if somehow they're the harshest to deal with. But
they're pretty good to deal with.
Yeah. Okay, great. Thanks, Matt.
No, thank you.
So at this point, we will go into the Q&A section, and appreciate everybody's time and attention so far. So I hope there's some good questions for us.
Guys, appreciate it a lot. That was a very informative presentation there. Some obviously interesting things to me in the industry I work in and cybersecurity. So, Matt, I thought it was extremely interesting, the discussion about liability chain, right? And how and Chris and I worked on this a lot when he was becoming an insurance agent. So And basically the way we referred to it then was follow the money, right? So in the case of an independent marketer in our industry, they likely have, if they're not branded, they probably have a relationship directly with an acquiring bank, right? A petroleum payment processor. And there's about 4 or 5 out there. And so in that case, that liability chain goes directly from the acquirer down to the merchant. And so I thought the very interesting part is when you start talking about brands, which you cover pretty well. And that it really depends on the brand. And so in some cases, the brand may be in the middle of the settlement process, in which case they would be the merchant of record. And then they likely have a contractual arrangement with their individual marketers that are branded that passes that liability on, right? And so in that case, the liability chain would be with the oil brand, and then they would contractually probably pass that along down versus a fine maybe coming directly from a car brand.
Right.
Of course, that doesn't happen a lot in petroleum. We don't see a lot of payment card breaches. There's been a few large ones, but the smaller merchants have been pretty well protected over the years. So a few questions coming in here. First and foremost, what should businesses look for in reviewing coverage, or is that something maybe they should contact a broker to have a review about?
I think that's a good question. Initially, it's important to review the limits if you do have coverage currently, and make sure that your limits are keeping up with your growth if you are growing. Yes, I think it does start with your current broker, whether you have coverage or you don't have coverage. Is questions to ask your current broker is, are you able to provide several options? I understand the market is becoming difficult to buy cyber liability insurance, and rather than simply having, like Chris stated earlier, having cyber as an endorsement to a general liability policy, which provides very, very little coverage, better than nothing. But as you look at it, do you have options with your current broker? And if so, great, then continue down that track. If not, perhaps it makes sense to reach out to a referral you may get in your community.
Thanks, Matt. Chris, a question here around attorney-client privilege, which obviously comes up a lot in the businesses we're in. And so a question here, in the case of a breach or a security incident, and I know these are different based on whether it was a payment card breach or whether it was something like ransomware or something like that. But in these security incidents, how can a business make sure that the forensics are protected under attorney-client privilege, and how does that really differ between a payment card breach and something like a ransomware attack?
Yeah, that's a great question. I mean, it's from the PFI or the credit card side. If there's a credit card breach and the card brand has required that a forensic investigation be done, you as a merchant make a contract with that PFI company, that forensics company, and the only entity that gets that kind of information, the result of that forensic investigation, is the card brand and the acquirer who's involved. There's no concern that information will get out into the water stream and create an additional PR problem or anything like that. At least that's the way the process is set up, to be kept tight to the vest and confidential. And as the merchant, who's usually the one paying for, or if they have insurance, then the risk is transferred to cost. They have a right to see and need to see what the results of that are, so that they know what kind of mitigation that they might have to put in place. But the other issue here is that issue of keeping that information confidential and actually being able to meet the state that you're in, that their requirements, definitely is a legal conversation, because if it hits a certain number of residents of that state, then you do have a requirement to report it. But that doesn't mean you have to share all of the elements behind the breach and all of the dirty details, if you will. But that is a good conversation for the attorney. And as Matt mentioned, there is a legal team that gets involved if you have an actual cyber liability policy, who will guide you through that process. And you want to make sure that if you have a cyber liability policy, it's covering things like that: forensic expenses, legal expenses, notification, regulatory fines and penalties, credit monitoring and ID theft repair, public relations expenses, and just liability and defense costs. So there's those first-party expenses of stuff that affects you directly, and those that come from third parties as well.
Thanks, Chris. That's very good info. This next question is about security controls, which is a particular area of business that I'm in, working here on the security side at PDI. And so I'll leave this one up to either one of you that has the best information, but and I've got a little bit of background on this too. So a customer of ours recently came to us, and they were trying to get cyber liability coverage, and they had the carrier or the broker, I suppose, send them a report. It was from like a third-party scanning tool, like a risk assessment tool that one of these very large ones that does like broad scanning to kind of see what vulnerabilities are out there for a company, right? And there's a few controls on there where the underwriter said, okay, you either need to fix this or you need to provide us with some type of information about why the business needs this in place. And these were common vulnerabilities, right? And so they brought it to us and said, hey, can you give us some guidance on how to respond here? And of course, our response was, I don't think we would really respond to that. We probably want to fix those problems, right? And then go back to the underwriter and say, okay, these don't exist anymore. And so those are very common now, with carriers saying, hey, you've got these problems that we see, and you need to either fix them before we underwrite, or it's going to be more expensive. So what kind of security controls are insurance carriers really now looking at in their underwriting efforts?
Chris, I'm gonna also let you, because in our takeaway right there, as you concluded, you hit on a number of these items, as you know well, and Mark, obviously you live in this world. From where we sit as the insurance broker, unless these items are in place, then carriers are moving on and they're declining to even provide an indication for coverage. Starting with quarterly cybersecurity awareness training that includes phishing testing and training, and filtering, scanning emails for malicious attachments and or links, use of an endpoint protection and response product. There are about 10 or 11 significant headline items that I see from the locked-in global cyber team that serve as the foundation. Chris, your thoughts on that?
Well, absolutely. They're getting more and more, more intel about the human side of attacks that work, and then more of the network technical side of how attacks work. And it is fascinating. To Mark's earlier point, we've had a couple people in the insurance industry contact us as a scanning vendor and say, can you be our scanning engine outside of PCI to actually run general vulnerability scans on the client before this underwriting takes place? And it was just a fascinating thing to see develop. And then you hit on some of the other key ones, especially things like endpoint protection. Do you have the right antivirus in place? And if you have firewalls, are they being managed by you, or do you have professional third-party management of those? How often are you checking these things? How often are you testing these things? And it's really interesting to see how advanced they've got in understanding the elements. And then depending on the size and scope of your organization, they might opt for more security controls that they're going to make you prove that you have in place, as opposed to less. So I think it's interesting to see the whole scope of that.
It also reinforces, Mark, having a group similar to yours to assist, so that a lot of this stuff is for a business owner may appear daunting, but if you have the right partner in place and you bring this list to them, it can be done pretty effectively or efficiently by companies like yourself.
Agreed.
Thanks, guys.
Sure.
Very, very informative. So, Matt, it's interesting the things you laid out there: phishing exercises, email scanning, endpoint security, managed firewalls. These are all things that we also tell the customers should be the baseline of security. So it's interesting that, probably not a coincidence, but interesting that those things all match up with what the insurance carriers are looking for. So
Yeah.
that's all the questions that we had today, guys. I really appreciate your time. The very informative webinar you presented here, and looking forward to seeing you guys again soon.
Hey, Mark, I
Good,
did
thanks.
notice before we sign off, there is a question that came in, I believe, that is, as stated, slightly off topic, but relates to insurance. Do you see that? And I can speak to
It was a
that.
general question about outside of cybersecurity, your thoughts on insurance for other liabilities like food safety, underage sales, and some of these other things. I know you guys insure more than just cybersecurity, so I'm sure, Matt, that you can probably speak to this.
Well, yeah, it would definitely, and it's an interesting question, and being that we are highly focused in cyber and executive risk, I would lend this type of question to colleagues at Lockton. However, to the extent that you are taking steps in any form of risk that you have, to the extent that you are proactive to position your company in a more favorable place than it would be if you didn't take the steps, it's critical that, again, your broker and your team are experienced to go to the insurance marketplace, not just the same carrier each year, but to challenge the market, because they work for you, not for the carriers. And to tell your story effectively in the steps you're taking so that you can get the best terms. So yes, I would say, to answer your question, David, is to the extent you educate, or your broker together with you educate the insurance carriers for any form of risk on steps you're taking, will provide favorable outcomes.
Thanks, Matt. Appreciate that. Another point also on that question is if you're going to look to see where you have liability, if you have standard E&O insurance, you want to make sure you talk to your broker to make sure it's not already covered under your standard E&O.
Exactly.
Do we have any more questions out there? I think that was it. All right, guys, really appreciate your time. Thanks a lot.
Thank you.
Yep.